The markets for gold and silver are essentially just that. London and New York's gold and metal markets, administered by banks, are bucket shops, in my view. Sure, someone, maybe even a major player, may request delivery at some point. If you recall correctly, silver experienced the silver squeeze in 2021 and traded as high as 30. Plus, many were thrilled about that. They were afraid it would start a fire. I had my doubts as I've witnessed the manipulation of the futures market by bankers for more than 20 years. Yeah, silver's breakout above $30 has been long overdue. On top of that, I'm really bullish on the market. The technical picture shows that we overcame resistance at 35 a few months ago. The next objective appears to be 40. And yes, they are making great efforts to prevent it from reaching that level, but I believe it will inevitably reach that level on a fundamental basis. The fact that our silver deficit has persisted over the past 5 years is particularly concerning, in my opinion. The supply of silver is inadequate to meet the demand. That's a lot of optimism. Not to mention the fact that silver is essential for the investment and infrastructure development of nations like India and China. As a result, silver becomes, in my view, one of the world's most undervalued assets. We haven't even gotten close to where silver got in 1980, let alone 2011. The most important thing with silver, in my opinion, is to be patient. I believe that perseverance will be compensated. After silver crosses the $50 mark, which acts as a boundary, we may observe the silver miners, the fireworks, and the silver itself. I also believe they're looking great. While I do place a premium on physical silver holdings, I believe that investing in silver miners will provide excellent exposure to this trend. Plus, they're exhibiting some life-affirming behaviors. Well, I just think it's going to be uncharted ground once it breaks beyond that crucial technical level. Imagine a massive teacup and handle configuration on the silver long-term chart that starts in the early 1970s. In particular, a multi-decade one, such as silver, is extremely rare. In the early 2000s, we had a gold teacup and handle formation that had been going on from 1996 or 1997 to 2003 or 2004. And once we broke through the top of the cup, which happened in 2005 or 2006, I believe Jim Sinclair was the first to bring this up. I can't put a certain date on it, but about $400 to $430 was the price. Gold did indeed soar, and within a span of 3 or 4 years, its price had risen to $1,000. The teacup formation has been kept at a low level for decades, which is why I believe it is essentially a pressure cooker. If it manages to go over that barrier, I predict that explains why I see pyrotechnics. Who are these people anyway? I'm going to guess they're central bank employees who work for the bullion banks. Even though they don't own much silver, I believe the central banks are involved. Looking at silver's history makes me think they don't like it very much. Silver continued to be used as currency in several European countries all the way into the early 1970s. Silver was demonetized a little earlier in the United Kingdom, Switzerland, and the United States until 1967. The UK had gone bankrupt due to 2 major wars, which occurred in 1947. Yes, though, because silver is so pervasive and seemingly in our genes, I believe they would prefer that the general people not become involved with it. The term silver in many languages refers to currency. It is argent in French, plat is the Spanish word for it, and even the word dollar comes from the Spanish $1,000, which came from the Joachim Stoller silver coin. So I think that's why they're concerned. And a lot of times they also want to maintain the market volatile because that puts a lot of investors off. They want to make it so that it's just like a volatile commodity. And that was one of the strategies that they basically installed when when the US allowed gold to be legal again on 1st of January 1975. There's a WikiLeaks document where the Treasury and the Department of State communicate with bullion dealers in London, and they say, yes, it's good that we're going to have a futures market for gold because it's going to keep the markets very volatile. And it's going to keep the public from demanding physical gold. And it's the same thing for silver. And I don't think they're going to make it, though, because that situation is so out of control that I don't think the dollar or all the other fiat currencies have much time left. I think they know it. These bankers, even though Ben Bernanke seemed to play dumb when asked what gold was by Ron Paul. He said it was an addition, so that's why they try to keep things like under wraps, under control. The bankers might pay, you can't count them out. They might even reverse their short positions and go long silver. What the heck? They usually end up doing pretty well, no matter what occurs. Yeah, I worked in the futures market for like 20 years, largely government bonds and interest rates, but I became engaged in like other kinds of futures. And I can tell you that someone comes with a hefty order, they can move the price fairly sharply, notably in silver, because silver is not really a very deep contract, as deep as gold and other futures markets. So these folks know the price levels, the supports and resistances. And yeah, when the market gets too bubbly, they'll come in and sell like 1,000 futures of silver, which is significant. Prior to, let's say, the early 2000s, it was a bit more difficult to manipulate the futures market because all the trading was done on the floor and people could see who was doing what. You could tell if JP Morgan or the broker that JP Morgan hired was selling or not. But the market got electronic basically by 2004 or 5 or thereabouts. Futures were all traded electronic. So they can hide behind that because when you sell or buy on the screen, it doesn't reveal who's doing it. And the other thing they've done and they've been fined for doing is spoofing the market. That means you put a massive offer on the screen and then you pull it. But the reason you made the large offer is to scare people off from buying. It actually might cause some selling. Well, according to those working at the bullion banks, they don't actually go short, completely hedged. However, I must admit that I'm not convinced by that. Furthermore, I believe they frequently deceive their major clients. Any bullion bank will sell together with a large hedge fund that contacts them and says they want to sell 1,000 silver contracts. As a futures broker, I made it a point to carefully manage my clients' orders so that I wouldn't do anything to hurt their market position. Which is to say, I would definitely follow through on a large sales order he handed me, would hold back from trying to undercut the price, but they end up doing it anyhow, and, well, it appears that was the standard procedure in 2021 when we reached 30. The futures contracts were essentially crushed at the 30 level, and even the head of the CFTC publicly stated that demand had to be reined in. In addition, they effectively halted the price of silver for 3 or 4 years. Yeah, that's the deal. And it works just as well with gold. It occurs in several markets as well. Whereas regulators step in and crack down hard when this occurs in other markets. It appears that the regulator seldom takes action when dealing with gold and silver, nevertheless. Similar to what happened with the Hunt brothers, they only do it when the market is significantly rising. Because they were unable to maintain control of the market, they outlawed the purchase of silver futures in January 1980. So that's the CFTC. Their job isn't to safeguard investors, it's to shield these regulators from risk. The conflict in Ukraine in 2022 likely set off a chain reaction that included a massive short squeeze and the cancellation of trades, Innecco. Yeah, I had a conversation with David Jensen not long ago, and he informed me that the LBMA platinum market is currently experiencing a shortage of physical platinum in London, but that they still trade over 3 million ounces of it every day. It's similar to a bucket shop really, provided that customers don't want delivery. Like, Jesse Livermore is unique. I'm not sure if you're aware of that. Yeah. Essentially, he used to wager on prices, but he never got any of the shares because of that. In my view, that is essentially what these so-called gold and silver markets are. A collection of banks in New York and London acting as bucket shops for silver. And sure, maybe someday, somebody, probably a significant other, will request delivery. Additionally, as you may recall from January of this year, the LBMA gold spot settlement took 4 to 8 weeks. They basically couldn't make the delivery because they were short on gold. They complained that it was too heavy for them to move. However, that is not all. Andy is that. Closing the exchange and claiming force majeure or having the capacity to modify the regulations and say you can't have the silver or the gold are always options. you receive a monetary payment. So that's doable, but as an exchange, it would be quite dishonest of them. I also believe that is occurring on LBMA and COMEX. On top of that, I see the price discovery mechanism shifting eastward. In other words, engage in tangible exchanges like in Shanghai, Hong Kong, or even Moscow. In addition to Dubai and St. Petersburg, I believe they have opened a third. That then is how I envision things developing.